Hey everyone, welcome back to the Canela Show. It's your host, Priscilla. Today we're going to be diving into a topic that is making waves in the financial world. But first, let me ask you a question. Do you know what the stock market is? If not, don't worry about it because in this video, I'm going to be talking about several different things like what is the stock market, what is a share, what is a dividend, and why we want stocks that pay out dividends. So if you're new to investing, then this is the video for you, so keep watching. So what is the stock market? The stock market is essentially a place where investors buy and sell shares of companies reflecting these firms' collective value and performance. The share market serves as a platform for its investors to participate in the growth of the companies, to diversify their portfolios, and potentially earn returns on their investment. The stock market is where companies raise vast sums of money to accelerate successful startups, expand existing businesses, or consolidate operations and pay off debt. The price of the stock changes based on the demand for shares from new investors who want to buy, or the supply of shares from existing investors who want to sell. Investors decide to buy and sell based on the company's performance, economic conditions, the current price of the shares, and other factors. Not every investor makes the same decision based on the same criteria. So what might not seem rational to one investor will seem completely acceptable to another. People purchase stocks for lots of reasons. Some hold on to shares, some look for income from dividends. Others might think that a stock will rise, so they snap it up, trying to buy low and then selling high. And also, some others might be interested in having a say in how a particular company is run. And this is because when you are a shareholder, you can have the right to vote based on the number of shares that you own. So, what is a share? Shares are units of ownership in a company. The terms shares and stocks are used interchangeably, but they're technically a bit different. The word stock is a financial instrument a company uses, and a share is a single instance of that financial instrument. So shares represent units of ownership in a corporation or financial institution or financial asset owned by investors who exchange capital in return for these units. So, how much of the company you own depends on the number of shares that the company has issued and the number of shares that you own. So, if it's a small private company, one single share could represent a large part of the company. Major public companies have millions or even billions of shares. For example, Apple has billions of shares in circulation. So a single share is just a tiny fraction of the company. So owning a share gives you the right to part of the company's profits, often paid as dividends, and sometimes the right to vote on company matters, which I had mentioned just a few minutes ago. Which then leads me to my next question. What are dividends? Dividends are something that I'm personally focusing on with my portfolio. I'm focused on companies that do pay dividends because I want to earn an income from them. So dividends are a percentage of a company's earnings that is paid to its shareholders as a part of its profits. Dividends are typically paid out quarterly with the amount decided by its board of directors based on the company's most recent earnings. It's not always quarterly, but typically that's what it is. Dividends may be paid out in cash or in additional shares. When a company announces a dividend, it will also announce the payment date in which dividend will be paid to its shareholders' account. So you might have heard dividend yield or yield percentage. So the dividend yield of a stock is the dividend amount paid per share and is expressed as a percentage of the company's share price, such as 2.5%. And not all companies pay out dividends to the owners of common shares and instead retain their earnings to be invested back into the company. A dividend is essentially a reward paid to the shareholder for their investment in a company, and it is usually paid out of the company's net profits. And sometimes companies continue to pay out dividends despite when their profits don't justify the expense, because a steady track record of paying dividends makes it look much more attractive to the investor. So, who pays dividends? Larger, more established companies with predictable profits are often the best dividend payers. And companies with the following industry sectors maintain a regular record of paying dividends. So that's basic materials, oil and gas, banks and financial, healthcare and pharmaceuticals, and utilities. So another thing, companies structured as master limited partnerships, also known as MLPs, and real estate investment trusts, also known as REITs, are required to make specified distributions to their shareholders. So, who does not pay dividends? So it's basically opposite of who pays dividends. So that's young and fast growing companies such as those in technology and biotechnology sectors. They may not pay regular dividends. They may be just in like the early stages, and they'll retain all their earnings for research and development, business expansion, and operational activities. So investors that are seeking dividend investments have several options, including stocks, mutual fund, and ETFs, exchange traded funds. And so this leads to the last question. Why do we prefer a stock or a share that pays out dividends? And personally, I said this a little bit earlier that I am focused on looking for companies that do pay out dividends because I want to earn money. I want to focus on a company that is going to be paying me a dividend from part of their company. And this is just meaning that I'm entitled to part of the company and I don't want to sell, and I want to hold it for as long as I possibly can. And then doing this will allow me to earn an income that eventually I can put towards expenses. So I hope that you got something from this video. If you liked it, please give it a thumbs up. If you have any questions, please put that in the comments below. And as always, stay tuned for more.